Good evening, students. Am I audible?
Yes, madam.
Yes, ma'am. Yes.
Good evening.
Start. So our first session we can start now. That is taxation law and practice. If I am not audible or if you cannot see the presentation slides, please let me know. Okay. Then this is the first presentation slide set. So I have already shared this with you. I think you have got it, and unfortunately I did it today. I shared this with Miss Kalhari, so she will share it with you. So what is the taxation? So what are the main institutions that are engaging in taxation? So you know there are three institutions in Sri Lanka. First one is Inland Revenue Department. The second one is the Sri Lanka Customs, and the third one is Excise Department of Sri Lanka. So these three institutions are collecting taxes on behalf of the government. So that is the revenue for the government. That means for the government, revenue collecting agencies are these three. So what is the meaning of taxation, and what are the taxes collected by these institutions? Mainly Inland Revenue Department collects taxes, that is income tax, value added tax, social security contribution levy, stamp duty, betting and gaming levy, like that. So Sri Lanka customs also collect taxes, that is customs duty. When we are importing and when we are exporting, at that time, at the point of customs, they are collecting taxes. The third institution is Excise Department of Sri Lanka. So they are collecting taxes from the liquor and tobacco businesses. That means when liquor or tobacco manufacturers are manufacturing their products at that time when they are manufacturing, not the selling point but the manufacturing point and importing point, they are collecting taxes. So these are the main three institutions that are collecting taxes for the government. Then what is the tax? What do you mean by the tax? That is a compulsory payment. We cannot say I am not going to tax, because it is a compulsory payment to the respective government by taxpayers without any expectation. Actually, without any expectation, we have to pay taxes. We don't have anything, no gain from the taxation. That is not direct gain, but without any gain, without any expectation, we have to pay taxes, and it is a compulsory payment. We cannot say no, I am going to pay taxes like that, because it is a compulsory thing. So tax means a compulsory payment to the government. So the government imposes the taxes under several acts. That means it is government money. Tax is government money. So on behalf of the government, respective departments, authorities are collecting taxes. So they are collecting that taxes based on some provisions, some legislations. So without that legislation, without that power, no one can collect taxes. And the next one is taxpayer is not entitled to compel the government while paying a tax to give something in return of the amount he has paid. So we cannot request anything from the government saying that we are paying taxes, but using that government revenue, using that tax revenue, government provides some services to the population in the country. So what are the main characteristics of the tax? So as I have already mentioned, that is a compulsory payment. It is not only the compulsory payment, it is a personal obligation. So we have obligation to pay taxes. And the one is involved sacrifice to the tax. So it is involved tax sacrifice. Then it is a legal requirement. It is a second word for the compulsory payment. It is a compulsory payment as well. It is a legal requirement. So no advantage as written in the payment of tax. No direct advantage, but there are a lot of indirect advantages of paying tax. So what are the main objectives of taxation? There are two main objectives. One is revenue objective and the second one is non-revenue objective. So you know what is the revenue objective, because government collect taxes for the purpose of the revenue. So government has their own income and their own expenditures. So government collect income for the purpose of the population of the country. So they are collecting taxes, they are spending that collected income for the betterment of the country, mainly for providing infrastructure. For some cases, for some requirements, only public institutions should spend money. Private institutions are not going to spend money, because that is for the social benefit. So the next one is non-revenue objective. Non-revenue objective is provide incentives. That means, so we have two objectives of taxation. One is revenue objective and the second one is non-revenue objective. Non-revenue objective means without any revenue we are collecting, without considering the money value, we are collecting taxes with the objective of these things. So to provide incentives. So what is the meaning of that? Provide incentives. So sometimes there are several sectors in a country. So for some sectors we need to encourage, but some sectors we need to discourage. Mainly sin sectors, betting and gaming, casino, liquor, tobacco. We are not going to encourage that kind of sectors, but export, manufacturing, tourism, education, healthcare, we need to encourage the entrepreneurs, businessmen to do their businesses on that sectors. So to give some incentives, we use tax. If we want to encourage some sectors, we are giving incentives. If we want to discourage some sectors, we are imposing high tax rates to discourage that kind of sectors. So for that purpose, we use tax. The next one is to prevent excessive demand or to control inflation. That means sometimes for some products there is a very huge demand. Sometimes even though there is a demand, no, supply is very limited. So at that time what we can do, we can impose tax on that demanded product. Then we can decrease that demand. Then we can control the inflation. The next objective is to reduce the inequality. That means when we are imposing taxes, we know in our country there are several sectors, several steps are there. So several steps means some categories of the people are very poor, some are middle income earners, some are high income earners, like that. So when we are imposing taxes for the high income earners, we apply high income tax rates. For the low income earners, we are not going to collect taxes. We are giving them some reliefs. For the middle income earners, we are applying some reduced tax rates. Through that process, we can equalize the society. So for that purpose also we are applying tax rates. To support the development of country, how do we support the development of the country? So that is also very similar to the explanation I have given for the incentives. So to support some sectors for the development of a country, we have to develop every sectors in the country, not only one or two sectors. So for the development of the country also we can use taxation, we can give some incentives, we can give some tax exemptions for that special sectors. Likewise, we can use taxes for the support to the development of the country. So now you know what are the objectives of the taxes. So the tax can be categorized into two types. One is indirect tax, the other one is direct tax. So what is the meaning of direct tax and what is the difference between direct taxes and indirect taxes? Direct tax is one which cannot be shifted to others. That means if that tax is imposed on us, we cannot shift that tax to others. We have to pay that tax by ourselves. For an example, what is the example for this? For the direct tax, who can tell me? What is an example? Give me an example for the direct tax.
Income tax, capital gain, all of that.
Yes, very good. Income tax. Once it is imposed on the taxpayer, that taxpayer cannot shift it to another person. So that kind of taxes we call direct tax. So then what is the indirect tax? Indirect tax can be shifted or passed on others. What is an example? Give me an example for that.
Value-added tax.
Value-added tax.
So value-added tax is imposed on one person. They shifted it to others, mainly SSCL. So SSCL is imposed on the manufacturer, service provider, like that. But they are shifting it to the customer. Customer means we are the customers. So they are shifting it to others. So that is the main difference between indirect tax and the direct tax. The direct taxes, the impact of the money burden and the incidence are on the one and the same person. So that is the difference between direct taxes and indirect taxes. So in Sri Lanka, our direct tax ratio is lesser than the indirect tax ratio, our collection. So we want to increase direct tax percentage than the indirect tax percentage. So that is the requirement of the government. So but it is very difficult. Still we are depending on the indirect taxes. So then this is the one of the most important concept in the taxation. This is not only the Sri Lanka, but this is a worldwide accepted concept, that is voluntary compliance. So what is the meaning of voluntary compliance? Voluntary compliance means it is a voluntary means we should do it by ourselves without any other person's intervention. That means we should do it by ourselves. So taxation is a voluntary thing. No one is going to do it on behalf of you, but you should do it by yourselves. The taxpayer have a legal obligation. That means it is an obligation of the taxpayer. If then person is within the threshold, if that person is within this taxable 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 period, taxable income, within the level of taxable income, that person should definitely pay the taxes. So how do they pay taxes? They have to calculate their own taxes by themselves. So if they are within the range, what they have to do? They have to register within the department if they are liable to pay taxes. Then they have to pay taxes after calculating by themselves. No one is going to do it for them. Then they have to file a tax return within the specified time period, and they should report all required details to the department. So that is the compliance. We call it voluntary compliance. So compliance has major 4 pillars: registration, payment, return and reporting. So these are the main 4 pillars with regard to the compliance. It should be done by voluntary. No one is going to do it on behalf of you. So that is the voluntary compliance. So taxation has this very important concept, that is the voluntary compliance. So we call it self-compliance. We should do it if we are within the taxable range. We should be registered by ourselves. We have to calculate our taxes, we have to pay taxes, we have to file return, and we have to report it. So these are the main important thing. So without others' intervention, we have to do it. We call it voluntary compliance. This is very important concept in taxation, not only in Sri Lanka, in the worldwide concept. In every country, they are complying involuntarily. So we call it self-assessed tax system. So what is the meaning of self-assessed tax system? Self-assessed tax system, we have a self-assessed tax system, not only Sri Lanka, in most countries, in almost all the countries have this self-assessed tax system. So it is based on the idea of voluntary compliance. In this system, taxpayers should calculate their own tax liability by themselves, and they have to pay their own taxes without intervention of a tax official. Then what is the purpose of having a tax department? If a taxpayer is making the payment by themselves, then what is the purpose of having a tax department? We have that tax department to support the taxpayers. That means sometimes some taxpayers are voluntarily complying, but some taxpayers are not. So we have to move to that system, that means to the voluntary tax system, but still we have some taxpayers, they are not paying their voluntary taxes. They are not complying. So if they are not complying, to regulate them, to monitor them, there is an institution, that is the tax department. So that is why we have tax departments. So without intervention of the tax officials, they have to pay taxes, but the department's tax authorities' responsibility is to check whether they are complying or not. The department is looking at the taxpayers, whether they are registering on time, whether they are making their tax payments to the department, whether they are filing their returns, and whether they are reporting accurately. So if the taxpayer is not doing it accurately means not only making taxes, but real tax should be made within real time, due date. Tax payment of tax means not just making a tax, but that tax should be correct tax in correct time. So both are very important. So the responsibility of the tax officials are monitoring these taxpayers. If they are not complying, if they are not assessing their own, then the tax officials are doing it for themselves, not only the taxation. Then the taxpayers will impose by a penalty or interest. So that is also very important thing. So without taxpayers intervention, if we can calculate our own tax liability and if we can pay our taxes on time without applying any penal provision, we can survive. But if we are not making proper tax on proper time, the tax officials will assess us. Then at that time, not only the taxes, but we have to pay penalties and interest also. So this is the way of this is the responsibility of the tax officials. So what is the statutory background on taxation? Why do we have a statutory background for the taxation? So taxation is the government money. It is revenue to the government. It is collected by some authority from another one on behalf of the government. So at that time, there should be a proper regulation. Otherwise, anyone can collect any amount as they wish. So it is not a regulatory thing. So therefore, there is a government officials and there is a legislation. So for the collection of taxes, for the computation of taxes, there is a legislation, statute, an act. So definitely there should be an act, there should be a provision, there should be a legislation. Based on the provisions of that legislation, that act, we can collect taxes. If we are not comply with the provisions of that act, then only tax officials can collect taxes and they can impose taxes, they can assess taxes. So we cannot deviate from the legislation. So when we are collecting taxes and when we are calculating tax liability, we have to calculate that tax liability according to the legislation. So what is the meaning of a legislation? Who should do it? Who has the responsibility to prepare that legislation? So in the next slide we will discuss it. Then not only the act, there are some case laws. Why do we have case laws? Sometimes some provisions may have some ambiguities. So at that time, no one can understand what is the real meaning of this. So at that time, some taxpayers can case a file against that tax assessment. So at that time, the legal authorities can they are giving decisions. So based on that decisions, we call it case laws. Based on that decisions, we can apply some tax provisions.
Oh, yes, miss. Is it a decision making based on the past particular case, right?
I'm sorry, I can't hear you.
Is the
So
case law?
the
It
case laws
means
means sometimes when we are, if taxpayers are not properly calculated their taxes, then tax officials in the department can assess it. So for that assessment, that taxpayer may not agree. Then there is a appeal procedure.
Oh, okay.
They can go to the appeal. If appeal is not favorable to that taxpayer, again that taxpayer can go to the TAC. TAC means Tax Appeal Commission. Then from that
Oh,
tax
okay.
appeal commission also, if that decision is not favorable for the taxpayer, then taxpayer can go to the courts for the question of law. So not only the taxpayer, if tax appeals commission decision is not favorable for the government, for the Inland Revenue Department, the department also can go for the courts. Then from that court,
Oh,
after giving their decision, it is a legal decision. So for the similar case, similar issues, we can apply that decision. So we use that kind of case laws if we are having some ambiguities.
okay.
The
Okay. Then
next one is
from the
delegated.
past,
Hello, yes?
yeah, from the past particular case, then it will be become the law to apply
Yes,
in the tax,
definitely.
right?
Yes,
Okay.
but it
Okay.
should
Fine.
be relevant. It should be relevant to the
Yeah, yeah,
present case. It should be relevant to the present case.
yeah.
Then we
Okay.
can apply similar cases, similar decisions to the
Okay.
similar issues. Yes.
Thank you.
The
Thank you.
third important document that we can apply for the taxation is a gazette, regulations prepared by the ministries, gazette notifications issued by the government. So when we are calculating our tax liability, first of all we have to consider the relevant act, relevant legislation, then the case laws, then the gazette notifications. Because in the legislation, sometimes it is very limited wordings are there. That means in the act we cannot give very full description. We cannot give a very full description regarding that provision. Then sometimes the act says that that description will be issued in a gazette notification. That means for the issuance of the gazette notification also, act should be provided the right. Without that entitlement, gazettes cannot be issued. So with that requirement, gazettes can be issued. So when we are calculating our tax liabilities, we can use gazettes also. So when we are calculating the tax when we are doing tax computations, I will show you the time where we are using gazette provisions in that and the gazette notifications. That means regulations in the gazette notifications. So not only these documents, in addition to that, we have one more important thing, that is rulings and interpretations issued by the CGIR. That means the act provide that the issue right to issue the rulings and interpretations by the Commissioner General. That means some provisions in the act there are some ambiguities in the act. That means one person can consider one paragraph in one way, the other person can understand it in another way. Sometimes it can be happen because in the act we cannot explain each and everything. Even though we can explain it, some practical situations are completely different. For some taxpayers it can be applied, but for some taxpayers that provision cannot apply. Sometimes some ambiguities are there. Then what can we do? If the Commissioner General can identify that kind of ambiguities, until they are revising it, until they are amending it, we can issue some rulings and interpretations. Sometimes if in the act, if there is a word and several officials or several taxpayers can understand it several ways, then they can ask what is the real meaning of this word. Then Commissioner General can issue interpretations or rulings. So Commissioner General has power to do that thing, and that is provided in the Act. So because of that, it also has a validity. It also has a validity. So now you can understand, we cannot calculate tax liability even though it says it is a self-assessment. That self-assessment should be done based on these legislations, based on the provisions, based on the regulations in the Gazette notification. Mainly we are using, in normal cases, we are calculating our taxes by using the Act and the Gazette notifications, and sometimes rulings and case laws can be applied. So not for the general taxpayers, it is not necessary. It is normally we are not going to apply case laws and rulings and interpretations, but we have to do our calculations based on the Act and the regulations in the Gazette notifications. So how do we draft and how do we prepare an Act? So what is the meaning of an Act? There is a long process. For the preparation, for the drafting of an Act, for the preparing a legislation, it is not just a small process. It is a very huge process, very important process is there, because regulation is not just a booklet. It is a document, it is a legal document. So that legal document should be passed by the Parliament and it should be signed by the Speaker. After that only that will be a legal document. Until then, that Act is just a document. But for the collection of taxes, for the calculation of taxes, we need a legal document. So to become just a document to the legal document, there is a process. So now I am going to explain you the process of tax legislation. Tax legislation means Tax Act. How do we prepare an Act? How do we incorporate some main provisions to that Act? It is mainly based on the policy of the government. So that kind of policy decisions can be taken by the cabinet ministers, or through the budget proposal we can identify what is the government policy. So based on that policy, the acts will be drafted. That legal document is drafted. For an example, if the government wants to increase our salary, if the government wants to encourage some specific sectors, if the government wants to discourage some sectors, then they are saying it in their budget proposal, or they are publishing it through cabinet decisions. So then there is a requirement to incorporate that kind of decisions into a legal document. Then after budget proposal, we are collecting tax related proposals. What we have to do for the incorporation of that kind of legal policy decisions to the legislation? First of all, after the budget speech, we collect all proposals relevant to the taxes in that budget speech. After that, that details, that requirements are provided to the legal draftsman to incorporate to the legislation. Legal draftsman is the person who drafts legal documents. We call it legal draftsman's department. So there are some officials, very high officials. They are the officials who can draft legal documents. So after drafting that one, they should send it to the Attorney General's clearance. Clearance means then Attorney General look into that document and they check whether the provisions of that draft bill are not inconsistent with the Constitution or not. Whether that is inconsistent or consistent with the Constitution. That means some provisions may be inconsistent with the Constitution. So if so, the Attorney General will not give their clearance. Attorney General should consider whether that draft document is inconsistent with the Constitution or not. If it is okay, then the Attorney General will issue their clearance, say that that is not inconsistent with the Constitution. Then only that document can be present to the Parliament. But prior to that, Cabinet Ministers' approval should be obtained again. Then it should be published as a draft bill in the Government Gazette. So now it is a bill, not the act. After that, that bill should be present to the Parliament. It is for the first reading. Then we have to allow it for the file for lawsuits. That means if some parties are not agree with the provisions of that document, they can go to the courts. I think you have heard about that. Sometimes after incorporating provisions to the draft bills, some parties are going to file a case in the courts. So if we have to give some time period to file a lawsuit, then it should be the court decision should be obtained for that lawsuits. Then that document will be submitted for the second reading of the Parliament. During that second reading period, it is open for the votes of the members of the Parliament. If they need to make some changes to that, during that committee stage, they can request that amendments. That amendments can be made to that draft bill. So after that, after requesting or after making some changes to that draft bill, then it goes for the third reading. Through that third reading, it will be approved by the Parliament and the bill will be certified by the Speaker. After Speaker's certification, it will be a legal document. Until then, that legislation is not the legal document, but it is just a document. It is just a booklet. But after putting signature of the Speaker, it will become a legal document. Until then, we cannot, as tax officials, we cannot impose any tax against any person, because without law, without legal document, without legally approved document, tax officials cannot collect taxes, and the taxpayers also not buying by the legislation, because it is just a draft. So in that document, the effective date should be mentioned. In the document, the effective date for that regulation should be mentioned. Otherwise, no one knows the effective date. It is sometimes that effective date may be the date in which the speaker signed it, or if in the act says different dates, that different dates are applicable. So this is the method of drafting. Yes, you can share the attendance. Okay, so this is the process of a process of tax legislation. So now I think now you can understand, without this legal document, we cannot collect taxes. As well, taxpayers are not, they don't have responsibility to pay taxes. Okay. So these are the taxes administered by the department. So as I have already mentioned, three main institutions are there in the country: Inland Revenue Department, Customs, and Excise Department. So that department has for each type of taxes. So these are the taxes administered by the Commissioner General of Inland Revenue. So in my department, the Commissioner General has the authority to collect taxes, and Commissioner General is the administrator of these taxes. So now we are collecting these taxes, mainly income tax, value added tax, betting and gaming, stamp duty, share transaction levy. Like that, there are a lot of taxes. So for each type of taxes, we have a separate legislation. So separate legislation is there. Separate administration provisions are incorporated in that legislation. So we cannot collect value added tax based on the provisions of the Income Tax Act. We cannot collect income tax according to the provisions of the value added tax. For each type of tax, we have a separate act. So now I think you can understand the legal background of the taxation. If you have questions, you can raise your hand, or you can put it in a chat, or after I complete this part, you can ask questions. Okay. So my first target is to complete income tax. So even though we have lot of taxes administered by the Inland Revenue Department, for your taxation course, I have to consider only income tax, value added tax, SSCL, slightly stamp duty. It is not compulsory, but those are the main three taxes we have to cover. So within that three taxes, there are a lot of areas to be covered. So one by one I will explain it. So my first aim is to finish the income tax. Then we can move to the value added
சாப்பிட்டுட்டு
tax,
போங்க.
and finally SSCL.
வெளிய
Yes.
சாப்பிட்டு பழம்பட்டி போட்டு தரட்டே பாக்ஸ்ல. orange கொண்டு போங்களேன்.
I can hear someone is speaking. I don't know whether that is a question raised to me or not. So it is better if you can mute, otherwise it will be disturbed to other participants. If you want to ask questions from me, no issue, no, any time you can ask. You can raise your hand, or you can put it in the chat box. Okay, now we can move to the income tax part. So what is the history of income tax? What is the history of income tax? Inland Revenue Act income tax, the oldest act is Inland Revenue Act number 28 of 1979. So it has current year of assessment basis. That means 79's 80 year of assessment. Then after that, Inland Revenue Act number 38 of 2000. So within that act we had several related acts: Amnesty Acts, Inland Revenue Special Provisions Acts, Inland Revenue Regulation of Amnesty Acts. After that we had Inland Revenue Act number 10 of 2006. So all these are previous acts, now not applicable, but for some periods, previous periods, we have to apply that act, some provisions of that. But for the current period, we have Inland Revenue Act number 24 of 2017. So income tax, for the income tax, applicable act is Inland Revenue Act number 24 of 2017. So we call it Principal Act. We call it Principal Act. So can you see the way we are writing the name of the act here? Inland Revenue Act, there is a comma. Then number, there is a full stop. Then 24 of 2017. So this is the name of the act. When we are writing the name of the act, this way we have to write it. The way we have to write it. So we call it Principal Act. So after publishing this Principal Act in 2017, from that day to today, several amendment acts were published, certified. Several amendment acts were published. So one is Inland Revenue Amendment Act. So when we are writing, the name of the amendment act is this, like this: Inland Revenue Amendment. Within bracket we call it amendment. Inland Revenue Amendment Act number 10 of 2021. That means in 2021 we have an amendment act to the Principal Act. That means in the Principal Act there are a lot of provisions. If we want to amend some sections in the Principal Act, to do that we have to issue an amendment act. So after publishing 2017 Act, in 2021 we wanted to make some amendments to the Principal Act. We wanted to change some provisions in the Principal Act. So to change that provisions in the Principal Act, we cannot just erase it. We cannot just delete it. We have to pass an amendment act by the Parliament using this earlier process. For the amendment acts also, previously mentioned process should be applied. So in 2021 we have issued amendment act. Then in 2021 number 45 there was another amendment act. In 2023 number 4 another amendment act was published. In the same year, number 14 is the another amendment act. Then in 2025 there is another amendment act. So these are the amendment acts published to change the principal act. So now you can understand, time to time we had made some changes to the principal act. So why we are doing that kind of things? We are doing that kind of things based on the policy decisions of the government. Or if we identified some errors in the principal act, some application issues in the principal act, then also we are publishing amendment acts. Normally in the every year we have a budget proposal. In the budget proposals several changes related to taxes are there. I think you can understand, you can remember, very beginning we had some threshold, we had a personal relief sum amount. After that it was increased to 3 million. After that it was again decreased to 1.2 million. Then again it increased to 1.8 million. Sometimes tax rates, earlier we had one tax rate, after that it changed to another tax rates, again it changed to another tax rates. So this kind of things are happening every year with the budget. So if that kind of things are happening, that change should be legalized. Even though it is mentioned in the budget, we have to apply the same process to incorporate it to the legislation. Otherwise, we cannot apply. දැන් ඔයගොල්ලන්ට දැනිලා ඇති සමහර වෙලාවට බජට් ටැක්ස් එක ගැන මොනවා හරි බජට් එකෙන් කියලා ගියොත් සමහර වෙලාවට කට්ටිය ප්‍රොටෙස්ට් කරනවා පාරේ. මේක අයින් කරන්න ටැක්ස් එක වැඩි, ටැක්ස් එක අඩු කරන්න කියලා. හැබැයි එතන ගිහිල්ලා ප්‍රොටෙස්ට් කරා කියලා අපිට ඒක කරන්න බෑ. ඒක ප්‍රොටෙස්ට් කරාට ප්‍රොටෙස්ට් කරනවා කියලා ටැක්ස් එක නොගෙවා ඉන්න කලෙක්ට් නොකර ඉන්න අයිතියක් අපිට නැහැ. මොකද that it should be incorporated to the legislation. If they want to decrease tax rates, then what we
Yes.
have to do, we have to incorporate it to the amendment act, and through that amendment act it should be, principal act should be amended. So until then it is until then we cannot change the previous provisions. ඒ නිසා තමයි කවුරු කොච්චර කෑ ගැහුවත් මොනවා කරත් අපිට ඒ දෙයට කිසිම දෙයක් කරන්න බැරි. එතකොට මොකද කරන්න බැරි? ඒ වෙනසක් කරන්න ඕනේ නම් policy decision එකක් අරගෙන මේක change කරන්න කියලා, එහෙම නැත්නම් budget එකෙන් change කරන්න කියලා අර වගේම මම ඉස්සෙල්ලා කියපු process එකේ යන්න ඕනේ.
Miss,
Legal
excuse
draftsman
me, I can't understand Sinhala, please.
Hello, I can't hear you.
Oh, I can't understand Sinhala.
Yes, okay. If you can't understand Sinhala, I will explain in English. No issue. If anyone who cannot understand Sinhala, English
Thank you,
also,
thank
please
you.
ask in Sinhala. No issue. I will explain it in Sinhala. किसी प्रश्नයක් නැහැ. No
Okay.
issue. Language will not be a barrier for the education. So if you have any issue, you can ask in English or Sinhala. Unfortunately, I cannot speak in Tamil. So you can
Okay.
ask in English or you can ask in Sinhala. No issue.
Okay, thank you,
Okay.
thank you.
Okay. Then, so this is the way of calculating tax liability. It should be based on the provisions of the act. Okay. Have you seen an act? Anyone who seen the act? Inland Revenue Act. Have you seen the Income Tax Act?
Yes, madam.
Okay. Yes. Okay. This okay. This is the act. This is the Principal Inland Revenue Act. Here you can see the name of the act, Inland Revenue Act number 24 of 2017, certified on 24th of October 2017. So until the act certified by the speaker, this will not be a legal document. So this is a legal document because it is certified by the speaker. So now you can go through the act. Here it has several sections. Here we call it section 1, 2, 3. So the act has short title and the effective date of the act. As I have already mentioned, some acts has the effective date. So why do we have that effective date? Here you can see the date of certified. Certified date is 24th of October 2017. But the effective date of the act is different date. So effective date means the provisions applicable period. So you can see the effective date of the act later. Then we have several parts here. Part 1. This act has 2 parts. Part 1, then chapters. Chapter 1, chapter 2, like that. And in addition to that, we have divisions. Division 1, division 2, like that. Part 2 of the act is for Part 2 of the act is for administration provisions. So administration provisions are provided in part 2 of the act. So now you can understand that act has provisions or sections, parts, chapters, divisions. Then two parts are there. Then the act has special sections. We call it interpretation, that is in 195. So when I am explaining you the act, I explain it like this. Under section 195, you can see some interpretations. So section 195 is provided for the interpretations. So after these sections, we have several schedules here. First schedule is for tax rates. You can see it. It is for tax rates. Tax rates for resident and non-resident individuals. These are the applicable rates for that period. Then we have another schedule. The second schedule is for incentives. Here, second schedule is for investment incentives. Investment incentives means incentives provided to investors. To encourage investors, they are given some incentives. No. Madam, can the effective date be a before certified date? No. No, for some cases it can be, but if it should, that part should not be badly affect to the taxpayers. I will explain it when I am explaining about the uh, amendments. Then third schedule. Third schedule is for exempt amounts. If you want to see what are the tax rates applicable for company, what are the tax rates applicable for individual taxpayers, what is the tax rate applicable for partnership, NGO, charity, then definitely you should go to the schedule 1. In the schedule 1 you can see all tax rates applicable to taxpayers. Then schedule 2 is for the incentives. If you want to see whether your company has an incentive, then you have to go to schedule 2 or schedule 6 to check whether you can apply some incentives or not. Then schedule 3, that is exempt amounts. If you want to check whether your organization or as a person your income is tax exempt, where you should go? Which part you should refer? You should refer third schedule of that. Here you can see in the third schedule it has mentioned exempt amounts. Exempt amounts. Here Government of Sri Lanka. Amounts derived by the Government of Sri Lanka or a local authority, including any government department. So what it says? It says government department derived amounts are income tax exempt. Central bank income, not the employees of the central bank, but the income derived by the central bank, that is exempt. Then universities. University income is exempt, not the university staff. University staff's income is tax liable, but university income is tax exempt. Likewise, you can see lot of organizations. In addition to that, some income earned by the individuals are also exempt. So we can go one by one when we are studying this income tax part. Here, if you like, you can refer these things, then you can understand what are the income exempt in the hands of you. What are the income exempt in the hands of the taxpayer? Here you can see very famous one. Benefits derived or derived by an employee of the government of Sri Lanka from a road vehicle, permit issued to that employee. That means this is applicable to government officials, not the private sector officials. For the government sector officials, they are entitled for a vehicle permit. So that value is tax exempt. Yeah, very familiar things are here. So I can show you some very popular thing. Gain from the realization of an asset consisting of shares quoted in any specified list published by any stock exchange. That means if a listed shares are sold by someone, the gain of that listed share is tax exempt. So likewise, there are a lot of income that are exempt from income tax. So that kind of things are mentioned under schedule 3. So if you want to see which income is income tax exempt, so for each and every tax types there are several exemptions. These exemptions are applicable only for income tax. Then fourth schedule is for capital allowances, balancing allowances and assessable charges. So it is a depreciation part. So if you have studied for commerce stream, you may know what is depreciation. So for the depreciation also we have a specific schedule. Then schedule 5, we can move to schedule 5. Here Fifth schedule is for qualifying payments and reliefs. So under this part, you have given what are the payments considered as qualifying payment and what are the reliefs available to taxpayers. Mainly, reliefs are applicable only to individuals. Normally, we are taxing not only the individuals but companies or organizations, institutions also tax liable. But this kind of reliefs are provided only to an individuals. So here you can see very popular thing. Here the relief referred to in section 52 doesn't matter. It says 500 for each year of assessment is a relief. So 500 is the personal relief. This relief was applicable prior to 2020 year of assessment. That means from the beginning up to 2019 December, we had 500,000 tax relief, personal tax relief. That means if our annual income does not exceed 500, did not exceed 500, that part was not taxable. After that, this 500,000 increased to 3 million. I think you can remember. So earlier it was up to 3 million. That means personal relief was 3 million. Then again it was decreased to 1.2 million. So for this period now it is 1.8 million. That means if your monthly income is less than 150,000 per month, 150,000 means for a year that is 1.8 million. If your monthly income or if your yearly income is less than 1.8 million, your income is not taxable. So that is the personal relief. So that if you have an income more than that amount, that is tax liable, but you have a relief. So this is very popular thing. If you are a taxpayer, if you are paying taxes, you may know the relief, about the relief. So I wanted to tell you where it is available in the Act. So now you can understand. It is available in the Act under Schedule 5. So not only that relief, there are several reliefs. When we are studying this, I will explain. The last schedule is 6th one. We call it temporary concessions. That means this part is also applicable for the encouragement of the investors. So Schedule 2 and Schedule 6 are for the incentives to encourage investors. So we have these two schedules for that purpose. Now I have explained you about the Act, the content of the Act, how it has formed, what is the format of the Act. So now you can understand. So when we are studying income tax, each section should be studied. But we are not going to study each and every section, but most important and commonly applicable sections will be studied for your taxation purpose. But for the specific requirements, you can apply all other sections also. But the main sections that are applicable in the general form, we will study for your tax subject. Now you can see section 1 says short title and the effective date of the Act, then charging provision, taxable income, assessable income. There are a lot of things in the Act. So if we move to the first section, section 1, it is the here. So this is the short title. We call it, so the name of the act is provided very beginning, then short title of the act. So normally we call it preamble. It says the introduction of the act, why we are going to impose this act, why we are going to form this, why we are going to draft, what is the purpose of drafting this act. It says in the very beginning. So we call it short title and the effective date of the act. So it says this act may be cited as the Inland Revenue Act number 24 of 2017 and comes into operation on April 1st, 2018. That means the provisions of this act is applicable from this date. So prior to that date, what was the applied? I think you can understand. In one of my previous slides, I mentioned prior to this act, we had Inland Revenue Act number 10 of 2006. 10 of 2006. 6 Act was applied up to 31st March 2018. So now applicable act is 2017 Act. It is effective from April 1st, 2018. So now you can, I think you can remember, I have mentioned about some amendment acts. Some amendment acts are there. 2021, 2022, 2 amendments in 2023, and in 2025 we have last amendment. So what is the purpose of that kind of amendment acts? If we want to change some part of this act, for an example, if we want to remove this part, a person who has taxable income for that year, what we have to do? If we want to remove this part and if we want to keep only this part, what we have to do? We have to publish an amendment act. In the act, it should be mentioned in part A of the paragraph A of the subsection 1 of section 2 should be amended like that. So I will show you the amendment act. In the act you can understand how we amend the principal act. So here you can see just an explanation, just a note. You can see a note here. Short title and the effective date of the act. Here charging provision. Then here taxable income. Well, what is it? How do we call it? We call it marginal note. This is a marginal note. We call it marginal note. This is the summary of this part. So this is the name, subtitle of the subtitle of the section. So section 3, this is section 3, this is subsection 1, and this is subsection 2, subsection 3. For some sections we don't have subsections, but we have paragraphs. Section 4, paragraph A. Section 4, paragraph B. For some sections we have section 5, subsection 2, paragraph A. So how do we identify some parts of this act? This is the way we are identifying it. If I want to explain you this part, payments of personal allowance including any cost of living, subsistence, rent, entertainment or travel allowance. If I want to explain this part, how can I identify this section? I call it paragraph B of subsection 2 of section 5. This is the way I introduce you that paragraph. For some paragraphs, we have some Roman items. We call it item. If we have that kind of items, we call it item item 1 of paragraph A of subsection 2 of section 5, like that. So that is the way we are identifying some sections of the act. Could you please share the lecture recording? Actually, lecture recording will be shared by your coordinator, not me. So I am not recording this document, this presentation. I think one of your students, one of your participants, share recording this. This is a separate question. We will answer it later. Okay. So now I am in the income tax part. So the SSCL matter I will explain later. So this is the act. So I wanted to show you the principal act. I wanted to show you the principal act. So this is the okay. Can you see this one? Is it visible? New one. This is an amendment act here. This is an amendment act, Inland Revenue Amendment Act number 10 of 2021. So I want to show you the way of reading Amendment Act. So you should have better knowledge about the reading of the act. Without this knowledge, it is very, very difficult to understand the text. So here, this is the Amendment Act. As I have already mentioned, previously we had Principal Act. So if we want to amend some parts of that Principal Act, what we have to do, we have to issue an Amendment Act. So we have to apply the same process I have mentioned. So this one also certified by the by the Speaker on 13th of May 2021. So for this act, this is certified on this date. Then specifically there are some dates in this table. It says from which date this amendment is applicable. As one of the students asked whether we can apply the previous dates, that means prior dates can be effective. Yes, this is one of the examples. Here these are the effective dates of the Amendment Act. It says in this amendment there are tables in the, here you can see some tables are here there are some tables. Here table A and table A and table B. So it says the provisions of this act other than the provisions of sections referred to in table A and B set out this amendment act shall commence on the date on which the certificate of the speaker is endorsed thereon. So, other than table A and B, that means if there are some changes made and if that changes are not mentioned under A and B, that changes are effective from the date on which the speaker certified. But if the changes are mentioned under table A, that one is effective from on April 1st, 2021. That means some provisions, some changes in this act are applicable, effective from the date on which the speaker certified. Some provisions of some amendments of this act are effective from April 1st, 2021. Some changes mentioned under table B are applicable on the respective dates specified in that table. So, in this act, we have given two tables. If table A includes that change, that is effective from April 1st. If that change is included in table B, that is effective from the dates specified in that table. So, we can move to that table. Table B. So, the table B mentioned the changes. Principal Act of the section of the Principal Act is 5. Section 5 of the Principal Act was changed in the section 2 of this Act. What is the date of operation? 2018. So, the Speaker signed this Amendment Act on 17th April 2021. But the effective date of this change is 2018. So, we have done these kind of changes and we have made effective from the date prior to the date certified by the speaker, because these are errors in the act. These changes are favorable for the taxpayers. In most cases, these changes are favorable for the taxpayers. So, they are not going to oppose it because those are favorable. In most cases favorable, and some material changes are there. So, errors are there. So, we wanted to rectify those errors. So, that is why these changes were effective from the beginning of the Principal Act. So, Principal Act, effective date of the Principal Act was 1st of April 2018. So, these changes were made effective from that date. So, now I think one of the students asked that question. Now you can understand why we are doing this kind of things. And the next thing is, I think you can remember in the process of approving the legislation, in that process there was a very, very important thing, that is the clearance of the Attorney General. When Attorney General issuing their clearance, they are very carefully looking at this kind of things. If some changes made effective from backdating, if that is badly affect to the taxpayer, they are not going to allow it, because they are responsible to check whether that is inconsistent with the Constitution or not. So, they believe if that is badly affect to the taxpayer, then they believe that it is inconsistent. So, they are not allowing that kind of changes. So when we are making the changes, and if we are going to effective it backdating, then definitely they check whether that is badly affect to the taxpayers or not. Okay, now you can understand these things, and now I am going to show you how we are making such amendments here. Now you can see this part. Section 5 of the Inland Revenue Act number 24. In the marginal note, it says what we are going to do. Amendment of Section 5 of Act number 24, 2017. That means we are going to make changes to the Principal Act. Which part of the Principal Act? Section 5 of the Principal Act we are going to change. How do we do it? In Section 5 of the Principal Act, I think you can remember there are a lot of parts. There are a lot of parts in that section. So how can we identify which specific part we are going to amend or change? It has clearly mentioned in the Amendment Act. Here you can see Section 5 of the Inland Revenue Act number 24 of 2017 is hereby amended in subsection 3 of that section. That means Section 5 subsection 3 is going to amend. In subsection 3 also we have several paragraphs. So which paragraph we are going to amend? Under section 5 subsection 3 we have several paragraphs. Among that paragraphs, paragraph 3 we are going to amend. So we said it in paragraph C of that subsection. That subsection means subsection 3. By the substitution means we are removing some part and we are inserting some part. Now we are going to substitute for the words on equal terms. The words on equal terms we are going to remove, and to that 3 words we are going to substitute the words in the same grade of the service on equal terms. So this is what we are going to incorporate. On equal terms words we are going to remove, and we are substituting the words in the same grade of the service on equal terms. That is how we are amending. Then we have to consider this change is effective from when. Then we have to go to that table to check whether we have amended section 5 under which table. Table 1, table A or table B. We have made this amendment in a table B. So table B amendments mainly effective from the first date of the Principal Act. So you have to go there and check whether from which date we have amended the law. Then we amended paragraph F of subsection 3 of section 5. How was we did it? We did it like this. We substituted the word provident or savings fund or savings society of the words provident, gratuity or savings fund or savings society. So this is how we did it. Hello, mama මේ training session එකක ඉන්නේ. මම ඔයාලට පස්සේ ගන්න. Okay, now I think you can understand how we are amending, and that amendment is effective from which date. So it is very important because we are doing legal thing. We are referring legal document. So legally it should be done. Legally we should calculate the tax liability. Therefore legal terms legal methodology is very important. So in addition to that, I want to show you one more thing. Here you can see this amendment. Amendment of section 11 of the Principal Act. Now we are going to amend section 11 of the Principal Act. How do we do it? Section 11 of the Principal Enactment is hereby amended by the addition. Now we are not going to substitute, but we are going to addition immediately after subsection 3 of that section of the following new subsection. That means in that section 11 we have only 3 subsections. So we wanted to incorporate one more subsection. So we have 3. New one is 4. So this is a new subsection. We call it addition, not the substitution. So, okay. Now I have a question. Here we are going to insert this new subsection after subsection 3 and as a last subsection. Suppose we are going to insert this in between subsection 1 and 2. Then how do we number it? If we want to insert new subsection in between subsection 1 and 2, how do we do it?
1A.
Then we have to mention it like 4A. 4A. And within bracket. For the section we don't have a bracket, but for subsection we have brackets. You should know how to identify a section. So for subsection we have brackets. If we want to incorporate a subsection in between section 1 and section 2, then we have to mention this one as 1B, 1A. If we have a subsection A1 and subsection 2, if we are going to incorporate addition new subsection, we call it subsection 1A. It should be within bracket. If we want to incorporate new section, here we have sections. So section identified without bracket. Here we have section 15 and section 16 in the Principal Act, but we wanted to incorporate new section, not the subsection but the section. So it is related to section 15. Therefore we wanted to incorporate it near to section 15, in between section 15 and 16. Then we incorporated it like this. 15A, capital A is there, no bracket. If it is a subsection, which subsection we can mention? With bracket we can mention. Since it is a section without bracket, we have to mention it. So this is how we are adding sections to the Act. So this is how we are adding sections, and this is the Amendment Act. So I think it is very difficult you to understand sections and subsections because now we have several amendments in the Act. There are a lot of amendments in the Act. So when you are calculating a tax liability of some taxpayers, you have to consider the amendments as well. You cannot calculate without considering the amendment. So for the purpose of easy reference, the IRD has already incorporated all amendments like this. Here you can see the consolidated Consolidated Act to the Inland Revenue Act. This is a document prepared by the officials of the Inland Revenue Department, not the legal draftsman. This is for easy reference. This is not the legal document. This is only for easy reference. Through this document, you can easily understand whether that section has an amendment or not. When you are calculating the tax liability, if you are referring one section, you should know whether that section has an amendment or not. So you cannot refer all amendment acts issued up to date. So what you can do, you can refer the consolidated act. Through this consolidated act, you can see changes made through the amendment acts. Here you can't see any amendments here, this part, but we can move to section 5. You can see, you can remember, in the section 5 we have made some amendments here for this part. Section 5, in under subsection 3 we made amendments. Here you can see that amendment here. In the same grade of the service on equal terms, I think you can remember, under Amendment Act number 2020-21, we make some amendments to subsection 3 of paragraph C. I think you can remember. So these are the wordings we used in the same grade of the service on equal terms. So if we want to refer this part, very easily you can identify whether there is an amendment or not, and the Amendment Act name also there, effective date also there. So this is for the easy reference. So we are using this when we are calculating tax liability, but this is only for the reference, because when we are incorporating these changes to the act, sometimes several terms may be missed. If some wordings are missing, then the meaning of the sentence may be changed. So therefore, if you have this kind of changes, then you can identify from which amendment act this has been made. Then you can refer only that amendment. Otherwise, you have to refer all amendments to check whether there is an amendment or not. So we have made amendment to paragraph F also. Here you can see it here. Not only from 2021 amendment, from 2022 amendment also we have made some changes. So we have mentioned that colors here. If it is in green color, that means changes made under Amendment Act number 10 of 2021. Then 22 changes, it is in red color. 3 changes are in blue color. 22 number 14 changes are in purple, and 25 changes are in brown. So these are the changes made in each and every amendment. So this is the easiest way to refer the act. So when you are studying for the income tax, you can use this. But if you are working in tax related things in the organization, that means if you are a tax manager, if you are a tax official, then don't use this for the final decision. Don't use this as a final decision, because this is only for the purpose of referring. Then definitely you have to refer the act. We don't know whether some wordings are missing in the consolidated act or not. It can be happen because this consolidated act has been prepared only for the purpose of easy reference. This is not a legal document. So refer that part if you are practicing this as a tax consultant, no tax, you are practicing tax matters. Okay, now we can move to the slides. I can hear someone's noise. I don't know you are asking questions or not because it is very, I, it is very, I can't hear you properly. If you have questions, you can ask. Okay, so as I have already explained about the composition of the Income Tax Act, these are the important parts in the Act. Introduction, sources of income, assessable income, qualifying payment, taxable income, computation, methods of payment, tax credits and administration provisions. So we are going through all these important provisions when we are calculating the tax liability. Okay. Now you can understand what is tax, what we are going to do, what is the composition of that, how do we calculate it, and everything. Yes, I have already shared this with you. I think duty is not necessary. Presentation is more than enough because in the presentation slides I have included every important part. So in addition to that, in tax acts are available. Tax acts are available in our website. I have already shared English version of the acts with you. Not only the presentation, but I have already shared presentation slides, relevant income tax, all income tax, principal act and all amendment acts. Then yes, that part I have already shared. Prior to the next session, I will share the APID details and other circulars relevant to APID. I have already shared this document. Okay, now you know the Inland Revenue Act number 24/2017. It is certified on October 24, 2017. Effective date of the Act is April 1st, 2018. It has mentioned under section 1. In every slide, I have mentioned the relevant section also. So very informative, very descriptive document is provided here. So when we are studying it, you can very easily understand. So this is the first page of the Act as I have already showed you. And effective date I have mentioned. All amendment acts up to now I have mentioned. So you should know the names of the Act. I am not going to ask names of the Act for the exam, but the changes of the provisions you should know for the calculation. Then how many chapters are there, sections are there. This part also I have mentioned. Section 1 to 203 sections are there in this Act. Then the way of reading the section 150 section, within bracket we call it subsection. Then we have A, B, C within bracket, that is paragraph. Then we have simple Roman identification, we call it item or subparagraph. Okay, if you have questions you can ask, and if you want a break you can ask. If you want a break, I can give you 5 to 10 minutes break if you want, or we can continue. Now it is 10 to 9. If you want a break, please tell me. And I like if you have a coordinator. Then through that coordinator, I can share your requirements and my requirements. So because of that, if you have a coordinator, please send me your contact details through Miss Kalhari, or you can directly call me, and or you can mention it in the chat box. If you need a break, you can tell me. I can use 10 to 5 break, or we can continue. Silence means you don't need a break. Shall we continue? Let's have a break. Actually, I think course outline share the subjects and subject outline. So I think this part will be shared by Miss Kalhari. I have previous year course outline. Similar thing will be happen for this period also, but they have not yet shared their outline. Same thing will happen. If they have not shared, I can share it with you. I will ask Miss Kalhari. Okay, we can start by 9 o'clock. Only 5 minutes is there. Yes, we can start by 9 o'clock. Okay, shall we start it again? Shall we start? Okay. Then we can move to the charging provision of that. Few students asked about the presentation slides. Actually, I have shared it with Miss Kalhari, but I have done it in the evening part. So, I don't know whether she was able to share it with you or not. So, definitely she will share it with you tomorrow if she has not yet shared. So don't worry, hereafter I will share them as soon as possible, because today I hadn't time to do it. So I will share it, next sessions I will share early as possible. So now we are moving to the charging provision. Charging provision is the main section of that. We call it section 2. So section 2 is the head of the act. That is the main section of that. Without charging provision, we cannot collect taxes from taxpayers. If you can very carefully read this section, you can understand why I am talking about it. So, shall we read it like this? Income tax shall be payable for each year of assessment. So it says, income tax shall be payable for each year of assessment by a person who has taxable income or a person who receives final withholding payment. Tax payable on taxable income is calculated by applying the rates in the first schedule and deducting tax credits including tax credits. Tax payable on final withholding payments shall be calculated by applying the relevant rate as set out in the first schedule. So, why I am talking this section as the most important section in that? This section explains the everything that we have to do when we are calculating taxes. So, this is the imposition section. This is the charging section. In this section, it says who should be pay taxes, how should be calculate taxes, what is the period we have to do it, how do we collect, what is the payable amount of payable taxes, like everything is mentioned here. So in this section there are a lot of important wordings. So I have underlined all these wordings in this section. So, who should be paid the tax? That is, the tax should be paid by a person. A person should pay the taxes. So, what is the tax payable period? That is for each year of assessment. So, for the year of assessment, we have to pay taxes. Who should pay the taxes? A person. On what they have to pay the taxes? On their taxable income. How do we calculate taxes? We have to apply tax rates for that taxable income. So after that, what we have to do? We have to deduct tax credits. Then we have to pay taxes on final withholding payments. That means we have a person, there should be a year of assessment. The person should have taxable income and final withholding payments. For these two parts, they should pay taxes. So, this is the most important provision in this act. Without this section, we don't know who should pay the taxes. We cannot impose taxes without this imposition section. We don't know on which they have to pay taxes. We don't know how they have to calculate taxes. So that is why I said this is the most important provision in this act. The most important wordings here are underlined because I am going to explain one by one the importance of these sections and what the meaning of those wordings. So we are in a journey from the beginning to the end, from the identification of the income to the calculation of the tax liability. So that journey will start from here. So finally we have to consider the taxable income to be applied tax rates. So now you can understand, we are not going to apply tax rates to the income, but we are applying tax rates to the taxable income. Then you should know what is the taxable income, you should know who is the person, you should know what is the year of assessment, you should know what is the final withholding payments, and what are the rates applicable to each person, and what are the available tax credits that can be deducted. Then you can, if you know all these things, that means you can do the calculation very easily. So we can start the first step of this journey. Then the final step is the calculation of taxable income. From the identification of income to the taxable income, there is a long journey. So we can start that journey now. So for that purpose, we should know what is the year of assessment. Normally all of you know about the calendar year. What is the calendar year? Calendar year means a 12 months period beginning from January to ending December. So that is the calendar year, January to December. But for the tax purpose, tax calendar period is not the calendar year. Tax period means tax year is the year of assessment. It has mentioned under section 20. So what is the year of assessment? Year of assessment is not starting from January but from April 1st. Every year from April 1st to the subsequent year March 31st is the taxable period or year of assessment. So we call the year of assessment as 21, 22, 23, 24 like that. So in which tax year of assessment we are in? What is the current year of assessment?
26,
Now
27.
we are in April 2026. So what is the year of assessment now we are in? What is the year of assessment?
25 and 26.
26, 27.
Yes, that is 26, 27. Now our year of assessment is 26, 27. So March 30, up to March 31st, it was 25, 26. Now we are in 26, 27. Then a person. Who is the person? Then you should know the term, meaning of the term person. Who is the person? Normally we are talking about a person, that is you and me. You are the person, I am a person. But for the person, term person, there is a special definition under section 195. When you are reading the act, if some wordings are not very clear, you can go to section 195. Under section 195, you can see some interpretations for some words. If you have when you are calculating the tax, even though that wording has a general meaning, prior to that you have to go to section 195 to check whether there is a specific meaning under Income Tax Act. If you have a specific meaning, so you have to refer that meaning for the taxation. For an example, in general, person means you and me. For a company, for organization, we do not call a person. It is an institution. But for the taxation, person includes an entity. Entity means a company, partnership or a trust. So that means person does not say only an individual. So, for the taxation, for a person, for a human, we call an individual. For you and me, we call individual. So, for a person, not only the individual but entities also including. Entity has a separate meaning under section 195. Entity means a company, partnership or a trust. So now you know one more meaning. Then that person has two distinct segregations. So person can be divided into two, resident person and non-resident person. So now you know that person is not only a human but person includes an individuals and corporations, companies, entities. That person can be divided into two parts, resident person or a non-resident person. So when you are taxing a person, you should know whether that person is a resident person or a non-resident person. So why do we know that? What is the purpose of knowing that? Because if that person is a resident person, the income arises for that person from everywhere in the world that is taxable in Sri Lanka. If that person is a resident, income arises from wherever the source. That means world income is taxable in Sri Lanka for a resident person. If that person is a non-resident person, for that non-resident person, when we are calculating that non-resident person's tax liability, we have to consider only the income arises from the source in Sri Lanka. For an example, if that person is a resident person, if that resident person's bank account is in the overseas, suppose that person's bank account is he has a bank account in UK, he has a bank account in Australia, he has a bank account in Japan, and from that bank account, if he receives an interest income, that is taxable in Sri Lanka. Since that person is a resident, so at that time we have to apply double tax agreements, because same income cannot be taxed twice. So we have a special mechanism for that. We have to consider double tax agreements. We have to consider foreign tax credits. That is a separate thing. But if that person is a resident person, if that person has a business in another country, if he has a hotel in another country, that income is taxable in Sri Lanka, but the granting foreign tax credit is a separate thing, but it is taxable in Sri Lanka. So that is why we consider the world income for a resident person. If that person is a non-resident, for that non-resident person, if he arises income from foreign country and Sri Lanka, foreign country income should not consider for the taxation in Sri Lanka. For a non-resident person's tax liability should be considered based on the income arises from the source in Sri Lanka. For an example, a non-resident person has a house rented in Switzerland. In addition to that, he has a house in Sri Lanka. So we can tax only the Sri Lankan rent income. But if he is a resident person, the both rental income from Switzerland and rental income from Sri Lanka, both should be considered in Sri Lanka taxation. So that is the difference between resident source and the resident person and the non-resident person. So how do we determine whether that person is a resident person or not. So it is a very long story. So we have specific rules to consider whether that person is a resident person or a non-resident person. So we have a special provision for that. We call it section 69. Under section 69, we have a resident rule. In that resident rule, we have separately identified individuals, companies, and partnerships. Trust. Residence rule is applicable for each category. So now we are considering the residency rule for individuals. Individuals means human like us. So how do we identify whether that person is a resident person or a non-resident person? So we have to consider some rules. We have resides rule and other rules. So section 69(1) of the IR Act is applicable to determine an individual whether as a resident or a non-resident. So section 69(1) says it. So according to that section, two primary tests are there. There are two primary tests. One primary test is a qualitative in nature. Qualitative test and quantitative test. We have two types of tests, qualitative test and quantitative test. So we have primary test. So we call it resides rule and quantitative rules. So here it has clearly mentioned. So first one is reside rule. Reside rule. That is not the quantitative, that is reside rule. Resides means resides. Now we are residing in Sri Lanka. Residing means our every assets, our family members, our societies, our schools, everything are in Sri Lanka. So we call it reside. We are residing in Sri Lanka. So if we are residing in Sri Lanka, that means we are residents. So the next one is quantitative rule, that is the day of staying in Sri Lanka. If we are present in Sri Lanka for a year of assessment, more than 183 days, that means within 12 months period, if we are in Sri Lanka for more than 183 days, that means we are resident in Sri Lanka. For an example, Dr. Smith came to Sri Lanka on 11th October 2018 and he went back to USA on 11th May 2019. He stayed 213 days in Sri Lanka. That means more than 183 days he were in Sri Lanka. Therefore, he is resident in Sri Lanka. From the date of starting, he resident in Sri Lanka to the end of the year of assessment. So that is the quantitative test. Now I think you can understand. First of all, we have to check whether that person resides in Sri Lanka. If that person resides in Sri Lanka, it is not necessary to check with the number of days he presents in Sri Lanka, because resides rule is very important. If we cannot consider his residency based on that reside rule, then we have to consider the days of the presence in Sri Lanka. So in addition to that, we have two more rules, specific two rules. One is, even though that person is totally live in another country, if that person serves to the government of Sri Lanka, that means if he is an official of the government of Sri Lanka, then we consider that person as a resident person. For an example, officer of the different country embassy works for Sri Lankan government. Sometimes some officials are working in different countries for the government as ambassadors, as embassy members of employees. So they are whole year they are in another country, but we consider them as a resident individual. Some employees are working on a ship. If that ship belongs to Sri Lanka, according to the Merchant Shipping Act, that means their flag is in Sri Lankan flag in that ship, then we consider that person as a resident. So those are the rules that we can consider the residency of an individual. So these are some two examples. Because the reside rule, to consider the reside rule, we don't have a specific meaning. Specific meaning is not available. That is why we are considering the general meaning. If we have a word that cannot understand, then we can go to the section of 195, that is interpretation section, to check the meaning of that word. If it is not available in section 195, then we have to check within the act, in other sections of the act. Then if the wording is not, meaning of that wording is not available, then we have to go to other taxes administered by the Commissioner General to get the meaning. If meaning is not available in the other acts also, then we can move to the general meaning in the general dictionaries. So for the resides rule, for the term resides, we don't have a meaning in the act or other acts administered by the Commissioner General. Then we can go to the ordinary meaning. According to that ordinary meaning, we can consider he resides in Sri Lanka, considering his normal place. So then we have to consider the intention of the present, purpose of the presence. Here I have given you an example. Sometimes some persons are here in Sri Lanka for very temporary purpose. So then we consider that person as non-resident. So these rules are to consider non-residents are residents or not. Not that we are not going to consider non-residents as non-resident, but non-residents to consider whether they are resident. So we have to consider non-residents citizens in another country or a person live in another country. We are going to check whether they are residents or not. So we have to check with their length of stay in Sri Lanka, their property, ownership of the property, bank account details. Considering all these things, if we can consider that this person resides in Sri Lanka without considering 183-day period, we consider that person as a resident person. So if their family and the businesses are or employment ties are in Sri Lanka, he is reside. Under reside rule, he is resident. maintenance and location of assets are in Sri Lanka, then he is resident under reside rule. Social and living arrangements are within Sri Lanka, then under reside rule he is resident in Sri Lanka. So this is a practical exercise. Mr. Saman is doing his occupation in India and remitting his earnings to Sri Lanka. Now Mr. Saman is in another country. His permanent home available in Sri Lanka. Spouse and children live in Sri Lanka. How do you consider his residency? Because all his things are in Sri Lanka. Mr. Saman resides in Sri Lanka and resident for the purpose of income tax, irrespective of the reason that he stays more than 183 days outside the Sri Lanka. So, even though he stays outside the Sri Lanka, we consider that person as a resident in Sri Lanka because his all belongings are in Sri Lanka. Then we are moving to Mrs. Caldera. Caldera is an accountant who is doing her occupation in Bangladesh. So she is working in Bangladesh. Her everything is in Bangladesh. Her spouse, children, apartments, or bank account, bank details, other things, FDs, everything, other societies. She is a member of the society in there. So then we have to consider whether that Mrs. Caldera is resident in Sri Lanka or not. Since everything is in Bangladesh, we consider that person is resident in Bangladesh and non-resident in Sri Lanka. So that is how we consider the residency of an individual. So why do we need to know whether that person is a resident or a non-resident? I think you can remember the scope of the taxation and some reliefs are applicable to residents, some are not applicable to non-residents. Therefore, applicable rules are different for residents and non-residents. That is why we have to segregate, we have to consider whether that person is a resident or a non-resident person. So that is very important. Then for a partnership, we are not going to calculate only an individual's taxation, but we have to calculate partnership taxation and trust and a company taxation. So for a partnership also, we have to consider whether that partnership is a resident or non-resident. We can consider that partnership is a resident if it is formed in Sri Lanka. If the partnership's management and control of the affairs are exercised in Sri Lanka. If it is a trust, it is also same as the partnership. If it is settled or established in Sri Lanka, trust or trustees are resident in Sri Lanka, whether the managers' decisions are taken in Sri Lanka, then we consider it as a resident partnership or a resident trust in Sri Lanka. Then we have to consider a company. If that company is a resident in Sri Lanka, for that purpose, it should be incorporated under the laws of Sri Lanka. If it is incorporated, you know, all companies should be incorporated under Companies Act. If they are incorporated, they are company under Sri Lanka Companies Act, then we consider that company as a resident company. Next one, we have to consider whether it is registered or principal office is in Sri Lanka or not, whether that company's management and control affairs are exercised in Sri Lanka. Then we consider it as a resident company. Then now we have studied each and every important word here. So now you know what is year of assessment. Then you know what is person. Then we can move to the taxable income. So how do we calculate taxable income? So now you know that we are not going to tax our income. That means we have lot of income, business income, from salary income, interest income, dividend income, rent income. There may be lot of income categories, but we are not going to calculate, we are not going to tax that total income. Then what we are taxing? We are applying tax rates not to the income but to the taxable income. If so, we should know what is taxable income. Then who knows about the taxable income? Do you know about the taxable income? What is it? Taxable income. So for the calculation of taxable income, it is a long journey. To calculate that taxable income, we have to identify the income sources. From that income sources, we can deduct some deductions are there. We can deduct that things. Then we will have a assessable income. From that assessable income, we have to deduct qualifying payments and reliefs. Then we will have taxable income. So this is the income we are going to tax, not the income in the first step. So now you can understand, we are going to tax taxable income, not the income. So now we are going to apply tax rates to this taxable income. Then we will have the tax liability, payable amount. From that payable amount, we can deduct tax credits. Tax credits means taxes already deducted in respect of the income we received. So we can deduct tax credits. Then we have payable tax. This payable tax should be paid by the taxpayer. So this is the journey of the income tax. We have to study from here to calculate the tax liability. So for the calculation of tax liability, our most important terms I have already explained. One is assessable in what is the assessable year of assessment. Then who is the person. So that those two terms are very important. Now we are going to calculate the taxable income. To calculate that taxable income, we have to start it from the sources of income. So from the sources of income, step by step, we have to go to the taxable income. Actually, it is a long journey. So that long journey can be started from here. We call it sources of income. From the sources, first of all, we should know what are the sources of income. So we have very limited period, limited time. Now it is 15 minutes are available. So if we start the sources of income today, we cannot finish it. So I am not going to start sources of income today because it is very important part for the calculation of taxable income. We should identify the sources of income. So according to this act, we have 4 sources of income. We call it employment income, business income, investment income and other income. These are the sources of income, and we are receiving lot of income as a layman, as an individual, as a company, as an authority, as a board, as statutory body. We are receiving lot of income from several sources. So first of all, what we have to do, first of all, we have to collect all types of income into one basket. if we are receiving salary, if we are an employee of any organization, we are receiving salary, overtime, other allowances, then fuel allowance, vehicle allowances, telephone allowance, entertainment allowance, bonus, incentives. We are receiving several things. We are receiving lot of things from our organization. So one by one we have to consider for the income tax. That means every income receiving from our employer we should consider. Then what else we are receiving? We have to put everything in one basket first of all. Then if we have a bank account, fixed deposits, term deposits, savings accounts, from that accounts we are receiving interest income. If we have deposited our if we have purchased shares, we are receiving dividends. If we are selling our shares, we are receiving profit or loss. If we have a business, we are receiving income from that business. If we have a house, if we have a vehicle, if we have rented it out, we are receiving rent income. If we are engaging in betting and gaming, we are receiving some rewards. If we have purchased a lottery, we may have some winnings. So these are the income we are receiving. So as an individual, what we have to do, first of all, we have to write each and every income we are receiving from several sources. Then what we have to do? Then we have to segregate that income into 4 baskets. Now we have only one basket altogether. That basket should be segregated into 4 baskets. That 4 baskets are employment income, business income, investment income and other income. For each income source, we have a specific section in that. For employment income, section 5, business income 6, investment income 7 and other income 8. Now we are going to segregate our income. Take our income from that huge basket. Take one by one out. First one is salary. What we have to do? Salary we are receiving because of our employment. We have to put it in the employment basket. Then overtime, employment. Then bonus, employment. Vehicle allowance, employment. Entertainment allowance, employment. Then interest income, investment. Because we are receiving interest income as a passive income. That means without any intervention, without any effort, we are receiving it. So that interest income, dividend income, rent income, all income should be put into the investment basket. If we have a business and if we are receiving business income, that income should be categorized under business income. After including every income into these 3 baskets, then we have to check whether there are any remaining income, because most dominant one is the employment. So if we are taking one income out of that main basket, first of all we have to consider whether we can categorize that income under employment. If so, definitely we have to categorize that income under employment. Then the second one, if we cannot categorize it under employment, Then we have to consider whether we can categorize that income under business. If we cannot categorize it under business, then we have to consider whether we can categorize it under investment. For an example, interest. Interest income. Can we categorize interest income under employment? No, it is not an income received from our employer. So we can't categorize interest income under employment. Then we have to consider whether is it a business income? No, I am not doing a business. I am just deposited my money in the bank. I am receiving that interest income from that savings account. So what we have to do? So we cannot categorize that interest income in the business category. So we are not going to categorize it under business income. Then only we have to consider whether we can categorize it under investment income. Yes, interest income can be categorized under investment income. Then we have to put it into that investment basket. Likewise, each and every income type we are receiving, this we have already received for the year, specific year of assessment. We have to consider specific period. So each and every income we have already received, we have to categorize into each basket. Income categorization is very, very, very important. If we cannot categorize our income into these important three baskets, then only we have to consider the other income category. Otherwise, we should not categorize any income under other income category. If we cannot categorize income for employment, then for business, then for investment, finally we can categorize that income under other income source. So this categorization is very important. As I mentioned, for the resident and non-resident person, categorization of income also very important, because applicable provisions for each category are different. Slight changes are there. Therefore, clearly categorization of income for the sources are very important. So this is the first step of calculation of the taxable income. To the calculation of taxable income, segregation or identification of the income source is very important. So this is the first step. So there are several rules to be considered whether some income are to be categorized under employment or business or employment, like investment, like that, because some income are very difficult to categorize, very difficult to identify whether it is business income or employment income, because very difficult to draw a line in between employment income and business income and investment income, because some income sources types are very difficult to identify. Therefore, we have specific rules to be determined whether that income is an employment income or a business income. So today we don't have much time to do that part. Therefore, I will do that part in the next week. Then you can read this document, because there are few slides are there. So we can start it, the determination of income, how to determine the relevant source. We will discuss it next week. So if you have questions, you can ask. I'd like to have your feedback. That means you understood. Can you understand what is taxation and how we are going to do this session? So if you have any issues, you can directly tell me, and if you need to and the speed, I for, to do this session, I should know whether I am doing this as you expect. That means whether am I very fast, very slow, because I don't know your tax knowledge. I considered as anyone in this class, all participants do not know in tax, do not have tax knowledge. If you have a tax knowledge, but I have to consider the participants who does not have tax knowledge, so that is why I am doing from the zero, from the lowest point. So I am happy if you can tell me. I am happy to have your feedback. Then we can go to the next sessions. Okay, thank you very much. If it is clear, I'm also happy if it is clear, because I don't know, I cannot see you. I cannot see your facial expressions. I cannot see your whether you understood or not this session, this subject. I like to have your feedback, and I like to have a coordinator. I like if you can appoint a coordinator, and you can share your thoughts with the coordinator. Speed is okay. Good. Okay. Understood.
Yeah, your
Very
speed is
clear.
okay,
I
ma'am,
think session
and
is very clear.
clear
I
as
have
well.
several feedbacks from you. To improve this session, what are the proposals? If you have any proposals, please let me know. And the thing is, the written documents, PowerPoint presentations, definitely I will share them tomorrow. I think you can receive that document tomorrow, and from next time, please make a copy of the document. Then you can write important things in the hard copy when we are doing your sessions. Presentation is received. Oh, thank you. Oh, yes. Okay. Then shall we stop the session now?
Yes, madam.
Okay. Then good night. Good night to all of you.
Good night, ma'am.
Good night,
Okay,
madam.
thank you, ma'am. Good night.
Thank you, ma'am.
Good night,
Good night,
ma'am.
madam. Thank you.
Thank you, madam.